Hey, good evening. Dan Fitzpatrick here, stockmarketmentor.com. I just got done doing about an hour and a half webinar for our members on basically on trading, what our current positions are, what the market is, what the market's like, and definitely some stuff on entries and trends. So anyway, if you're a member, definitely go check that out. If you're not a member, it's a free trial, so you may want to check it out. Too. This is, it was really good. I did it with Scott and Bridget, so it wasn't just me yammering on. So let's get to MyoKardia. Why? Well, because this is a stock. Look at this pattern and then compare it to DraftKings. I mean, they're kind of like the same pattern, really. And so I would trade them the same way. The stock was in a squeeze back here, breaks out, it starts to run up. You got to be long the stock, and you just stay long the stock. If you are, there's no reason to sell. You just hold it unless it breaches the 8-day moving average. Now, if you're not long the stock, and see the 8-day moving average, that's support when a stock's really starting to move. When a stock really starts ripping, that's when you can start relying on the 8-day moving average. And like I wouldn't sell like, oh, it hit the 8. But just use this as a frame of reference for whether the stock is still generally running higher. If you want to buy the stock right now, yes, you are chasing. You look at this stock on the weekly chart, though, and you'll see, well, maybe I'm not necessarily chasing. I mean, I'm in late, but it looks to me like this is a pretty clean breakout. And, I could see this thing ultimately. I'm serious. I could see it running to $200. I mean, on a company like this, fundies schmundies, the fundamentals don't really matter. Focus on the chart. So you could even take a little bit of stock here and, give it about 8%. You give it about 8. You have to give it that much room. I would actually I would advise that you wait for the stock to kind of give you a down day where you can get it close enough to the 8 here to where it's a kind of, you don't feel like you're risking buying the top. But I get it. I know how people trade, and I know you're going to do it anyway. You're just going to say, I'm going to buy the stock. I'm in. I got to get it. Fine, do that. Just have a defined risk. And, I say use the 8, but another way you could do it is this way. You look and see, okay, well, the stock traded at 29.15 today. So on Monday, if I'm buying the stock, I'll stay long the stock unless it trades below 29.15. Because if it trades below 29.15, then literally everyone who bought today on more than twice average volume is a loser. So I'm wrong on that trade. So that is your definition for wrong. If the stock trades below today's intraday low, you're wrong. Get out. You don't have to ride it the rest of the way down. But that's a way that you can get in here. And what you may want to do is just take like half a position that you might normally take, and then wait for the stock to kind of come in and rest a little bit. Make sure it doesn't roll over. I don't think it will. I think the stock has really good momentum. But just then try to get in on a little pullback that shows you support. That way you're kind of managing your risk, and at the same time, I'll say it, you're kind of chasing the stock. You are chasing momentum, but I don't think you're going to be the dog chasing the bus. I think if you get onto this thing, it'll run for a bit. So anyway, that's it. I'll see you all on Monday.